Well, hello everyone. Welcome to Buffett and Beyond Research Stock of the Week. And today we're going over Micron Technology with that stock symbol MU because it's been up, get this, 326% in the past 12 months. And here we are, March 21st, 2026 already. And let's go over Micron and see what this stock is all about and why it shot up just recently. It's been around for a long time, too. And remember, if you want to have lunch on the speech like Jimmy Buffett used to do, you've got to learn how to invest even better than Warren Buffett does now. So, Micron Technology, well, what's it do? Manufactures and markets semiconductor devices and components used in the computer, telecom, and office automation industry. Micron is one of the world's top memory chip makers of DRAM and NAND, competing with Samsung and SK Hynix, and its chips are critical for, and wait for the last one here, folks, AI data centers. Yeah, huge growth driver. 2, cloud computing. Yeah, that's big now. Not enough room up there. Well, there is enough room up there, but it's getting there. PCs and smartphones. And finally, high bandwidth memory used in AI GPUs, folks. That is what is in demand right now. And we put this chart up on our weekly newsletter, and this is the storage surge that they're talking about. And this is year to date, folks. So SanDisk and Western Digital, which we went over, up. This is year to date. This is 2.5 months. 203% for SanDisk, 82% for Western Digital. And today we're going over Micron, which is up a mere 61% over the past 2.5 months as of today. So or as of 2 days ago. So you might see slight differences in these returns because I'm doing this on different days, or I'm getting the information on several different days. Now down here, as one analyst puts it, the shoot up in prices just this past 2.5 months alone is based solely on super high demand with shortages in the demand capacity. So these stocks, are they sustainable? Well, if you had them and they're up this high, this quick, it'd be nice if it was sustainable. But of course, it can't be sustainable because other companies are going to catch up to them and come in competition with them as we speak. Now, let's see what they've done over the past 3 years. The blue lines, which you can barely see, is the average stock out there. And we're looking at the clean surplus return on equity. So Micron has a 3-year average of 33.5%, where the average stock has an average of 13.5%. And I liken this to a bank. Would you rather put your money in a bank that's earning you 13% or one that's earning you 33%? So that's kind of how we look at the clean surplus ROE. Now, with net income, it has just shot up, as you're going to see in the next few slides, recently. So the average stock net income growth, and that's the bottom line growth. It's not earnings, it's the bottom line net core growth of the company. You take away those options that are being paid as part salaries for future payouts. Well, there's a cost to that, and sometimes they don't put it on those sheets there, folks, or they might be in the footnotes. And if they sell a piece of property but they're in the computer business, that's a non-recurring item. So it's those type of things that are taken away from the earnings, and that's how we get net income, and we call that a clean surplus net income. It's cleaned up earnings is what it is. And then revenue, average stock revenue is about 7.1% per year, and Micron 108%, totally over the top. I've never seen numbers like this before. But let us look at a table here, and don't let it get confused. This is the net income that we've been talking about, bottom line earnings. And so we look at There was a loss in 2016, a loss in 2023, a big loss in 2023, and it's just come back. And then all of a sudden, look at these numbers shoot up for 2025 and then 2026. And we have numbers for 2027 that are above these, but that's almost 2 years out, folks, so we don't like to put them in there yet. But that brings the return on equity from back here a negative, down here a negative. So it goes up high, then it comes back down to below average, and then it gets above average, below average, below average, and then all of a sudden just shot up like a rocket. And here's the net income. Now, retention rate, it's taking all the money it's making and putting it back into itself in order to grow. But the net income growth rate is just, these are astronomical numbers. Revenue growth rate, 108% for next year, for 20, or I should say this year, 2026. Really, it's hard to fathom these numbers and that they can even keep going. So let's look at the last 12 months. Well, the black line down here is the S&P 500, up about 16%, which is very good, because usually in any 12-month period, you're looking at the S&P return of about 10%, and here it is 16%, so very good. And then Micron, and this is as this morning, as I'm recording this on Thursday morning, up 345% over the past 12 months. And you can see back here, the blue line is maybe an average stock, a little bit lower than average stock. And then all of a sudden, it started shooting up last year. They started looking forward. And here we are now. Are we making a double top in here, or is it going to keep going? And analysts just this morning are saying this is a good time to buy because the market's been down and the stock has dropped a bit, so go and buy it. I don't know about that, folks, because we do not have it in our growth portfolio because it's so erratic. Now let's look at the past 5 years. Again, blue line is Micron, black line is the S&P 500, and you can see that Micron, because it was erratic in its earnings, that it was a below average stock. So sometimes it did well, and then other times it just didn't do well at all. So that's why we didn't have it, or never had it in our portfolio. But then just all of a sudden, look at this. I mean, this parabolic rise in the price of this stock, and if you were in it, you done good, folks. But if you weren't, like we weren't, we didn't participate in this at all. And yes, we do worry about this stock continuing because other companies have to come in because of this popularity, and these companies, Micron and those other three that I was showing you, Western Digital, are making so much money that competition is going to come in here very quickly. So folks, remember our goal: build your wealth faster and safer with better than average stocks. We worry about Micron because it's been so erratic in the past, and even though it's having a good couple of years, a very good couple of years in here, we don't know if it is able to continue that type of growth. So we do worry about this stock, but if you have it, folks, it's good, and it's going to be good for another couple of years maybe. And that's what the analysts are saying. We have no clue how fast other companies will come in and compete with them. So remember, build your wealth faster and safer, and especially as folks get older out there, safer is a very prominent word in your vocabulary. So better than average stocks, but Micron has not been a better than average stock over most of its life. Today it is. So you just think about that, folks. And remember, this is the weekend. Go out, clear your head, take your mind off this market. We're in the doldrums with the market and all the trouble in the Middle East and the price of oil. As I'm recording this, just hit $114 a barrel. So take your mind off the market, go to the beach, go for a walk, be with your family, maybe have Sunday dinner together. Everybody, just be safe out there, stay well, and folks, we'll see you back here in a couple of days.